I'm going to show you something right now, and it's pretty shocking. I see this every day as I review homebuyers' credit reports as they're applying for mortgage applications. So, first and foremost, the average car price is now $50,000. That is pretty crazy, but this is what is getting us in trouble right here. Almost a third, nearly 1 in 3 vehicles are carrying some type of negative equity as they roll it into a new car loan. So almost a third of cars are underwater. Over 7,183 is the average negative equity that is being rolled into a new loan amount. And so when you see this, over half are choosing longer loan terms. So to make the payment more manageable, they're just rolling it into a 72-month car payment. 40% of people are doing that. Or even worse, over 12% are rolling it into an 84-month car loan. And so this is killing people as they roll this negative equity into a new loan. It's just making it harder and harder to pay it off. So here are a few tips and rules of thumbs that you need to follow to make sure you don't put yourself into the same type of situation. All right, the half-term rule of thumb. So in order to avoid this, you need to keep your car for at least half the loan term. So if you're taking out a 72-month loan term, which is 6 years, you need to at least keep it for 4 years. If you're taking out an 84-month, please keep it for at least 5+ years. This is going to help avoid negative equity. Most car depreciation happens in the first 3 years. So trying to sell or trade in your car during the first 3 years is just, you're going to take a massive hit, and it's not going to help with the negative equity trade-ins. So again, half-term rule, trying to keep it for at least half the term, hopefully even longer, to be honest with you. And then, just buying smart brands, right? Toyota, Subaru, Honda, these 3 brands are known for having higher resale value and retaining their value. So that's also going to help with negative equity. So I'm starting to see this weekly when I review credit reports on potential home buyers, and their car payments are just crushing their debt to income ratio, their DTI. That's the backbone of most loans. And so they have these long loan terms, or they have these really high payments, $14, $15, $18, $2,000 payments. Y'all, if you want to own a home and you just want to be smart financially in general, quit taking out car loans that are super expensive and long loan terms. Live within your means.